Hey, it's Mike over at Cross Country Mortgage. It's Monday morning, March the 24th. It's time for your Monday morning mortgage update for the week of March the 24th. We try to give you some insight, tools, tips, tactics, things that you can use when you go out there buying real estate, making those decisions. And let's talk about what happened last week, what's going to happen this week. So last week, we actually saw a slight improvement to mortgage rates. This is a chart or a graph that shows the trading of mortgage-backed securities. It's a live feed. And you can see that we're a little down today, down 13 basis points. On the right-hand side, that red candlestick means that money's flowed out of the bond market. Rates are going up a little bit today. But if you just draw a straight line the last few days before that, we see a lot of green there. That means rates got a little better last week, so we'll take it. Why? Why did rates get better? Well, we saw retail sales down. It means consumers aren't buying as much stuff. That's a weaker economy. Money will typically flow into the bond market, showing signs of weakness. And that means the rates got a little better. The other thing is the Fed met last week, their second Fed meeting of the year. They did not cut rates. They did not raise rates. They left them flat. We expected it. We expect 3 rate cuts this year. And the other thing that came out that impacted the market probably today more than anything in a negative way is stagflation. Stagflation is when we have inflation going up and the growth of the economy going down. Those are two bad things. We typically want to see one or the other. So the Federal Reserve said they expect inflation to get a little higher this year, their core or their goal, and they expected gross domestic product actually to get worse, less growth in the economy. So we don't want to see stagflation. Let's hope that that reverses itself. There's a lot of things that could make that happen or not. What are we looking at this week that's going to affect the market? Inflation, the consumer, and tariffs. We hear a lot of that in the news. So why inflation? Well, we saw some inflationary reports come out, CPI and PPI in the last couple of weeks that really showed inflation was starting to increase at a slower pace. The big report that's coming out this week on Friday is PCE, and that's the main report that the Federal Reserve uses to set economic policy. If it's higher, that's bad for mortgage rates. If it's lower, that's good for mortgage rates. Hey, if it hits expectations, we don't see mortgage rates changing too much. The second thing is the consumer. Consumer confidence is coming out. It's been really bad for months now. And if it continues to go lower, it means consumer doesn't have confidence in the economy. Actually, that's good for mortgage rates because it shows weakening economy. We saw retail sales fall off last week. So we could see a weaker consumer confidence reports. There's a bunch of them coming out. And if the consumer, again, just says, hey, we don't believe that the economy is going to be good in the coming months, that could be better for mortgage rates. Last thing is tariffs. So we know the Trump administration has been throwing these tariffs out, just about everybody, trying to make the trade more even because we're paying a lot more than we're charging. So trying to even the playing field, maybe bring some jobs. Well, the goal it really is to bring industry and jobs back to the U.S. So April 2nd, which is a week from this Wednesday, the Trump administration has been saying, hey, this is the big day where we're going to put everything in place. Well, since he's been in office, he's had some deadlines that he's basically said, okay, we're not going to do it. We're going to give another 30 days. We're not going to do it. We're going to give another 30 days. But this April 2nd is supposed to be like the Super Bowl of tariffs. The stock market rallied this morning on Monday morning on the expectations that maybe they're not going to implement these tariffs as drastically as they initially said they were going to. Trump's using these as bargaining chips and negotiating chips to try to make things a little fair. So why is this week important, even though April 2nd is next week? Because businesses want to hedge, get ahead of what they think is going to happen. What they think is going to happen with those tariffs, how they're going to be announced on April 2nd. So businesses are going to start making some choices. There's going to be some news about that, and that could absolutely affect our bond market, and it could affect the mortgage rates. If we see the sign of a weakening economy in the future, that's going to be better for mortgage rates. If we see signs of a stronger economy in the future, that's not going to be good for mortgage rates. So we're going to start the day floating and the week floating, really heading into probably Wednesday, Thursday, when the consumer confidence report's coming out, and Friday, the big inflationary report coming out. So if you have any questions on rates, please give me a call. If you know somebody can benefit from this video, please forward it to them. Have a great, productive week, and I'll talk to you next week. Bye-bye.